All right. Welcome everybody to this week's Middle Class Investor. All right, so we got a picture of the S&P 500 up as usual. We typically start here, and we just want to point out. Obviously, we had a down week. We got two touches on this trend line that goes way back, and our thesis is that we've got some sort of expanding triangle going on here. Where three ended here. I'm not sure if you can. Whoops. I don't know what just happened, but I want this over there. All right, let's try that again. Where three ended here, and then we've got some sort of A, B, C, D may have just ended, and then we're going to have E all the way back down here to 2200 or so. So that's kind of what, I mean, at least this could be this, this is some other pattern, and maybe this is the top, but it looks to be where this was wave three, where this is 1, 2, 3. This is all four down to here. So 4 is going to be down here. As long as it doesn't go below 2100. So we'll have a deep wave 4 pullback and then a rally up to a new high yet again. So I don't know, somewhere maybe north 3100, 3200 on the S&P ultimately. That's how we're operating. That's how I'm operating. Let me clarify, and how I'm looking for trades. So what I'll do is I'll start looking for short trades here to the downside. I may even take some out of the money trades, around 2700 or so, maybe a year and a half out, and try to get down into this area. So there's lots of stuff you can do when you think you have the pattern. Now, if you don't have the pattern, if it turns against you, you just sell your position and get out and reevaluate. But you need to have some sort of plan, and I think this methodology helps us plan a little bit. Now, it's not helpful on a day-to-day or even a week-to-week basis because you get a lot of chop between highs and lows, and it's very random looking, and it's hard to decipher a pattern unless you just isolate ABCs. For example, we'll talk about that when we get to the euro, because I want to point out something that has changed in the euro. But for now, let's look at the 10-year yield, because there's some interesting stuff going on in the 10-year yield. Last week we talked about this potentially being the low in the 10-year yield. And since then, we've had kind of a three-wave move up with this big sell-off. So 3 up, that means we're going to have another low. So if you still haven't gotten out of bonds, you can wait a little bit and maybe wait for this to travel down a little lower. It could go as low as, this 1.7 area. So the bond market could rally quite a bit. It doesn't have to. It just has to go just a hair lower than this previous low. And then it could rally from there. So anyway, that's what I see going on in the 10-year Treasury. If you look at the short-term Treasury, it's still going lower. Let me just use my zoom here. A couple weeks ago, we had pointed out this little sideways pattern several weeks ago now, and we said the Fed wasn't going to do quite much of anything until we got out of this sideways pattern. And you never know which way it's going to break, right? It could have broken up, but it broke down, and so now the Fed's talking about lowering a quarter point. I think the odds on what the Fed's going to do is it's almost 100% that they're going to lower the Fed funds rate. And, the interesting thing I see here is I see a 5-wave move. So this could all take a little longer than than I initially thought. So see, there's 5 waves there, which means, well, let's put it this way: somehow there could be an ABC in here, you know, an A, B, C, X, and then C for kind of a WXY, or this could just be A, in which case we're going to have some sort of B up, but not a new high, something lower than this, and then a 5-wave move down here in C. So that's why I'm saying we could go as low as 1.7. We'll just have to wait and see. To me, I would probably trade this when the market starts to go up right here. I would probably enter somewhere in here, and then if it started to roll over here, I'd probably get out or take my stop to break even or something like that. To me, it's worth a try to enter yields long here. But again, if you're wrong, then you need to pick a place and be wrong, and then try again. Okay. Again, I don't think we're going to make new lows in the short-term yield or the long-term yield. Really, I was showing this as a short as a trade, but you really are not going to probably be trading the 13-week Treasury. On the 10-year, I really think there's nothing to do but look for long trades, and you know, it could be as low as something off of this congestion area that goes back here to September 2016. So, and that's around 1.8 or 1.75, something like that. So that's the area, these, you know, between here and 1.75, that's where I'm going to be looking for, you know, watching the market closely. All right, let's look at volatility. Volatility rallied a little bit last week, as we might expect, since the market was down. Usually we like to just make sure these are 100% oppositely correlated. If you see, particularly at turns, if you see where they're not correlated as opposites, it might be telling you something about what's going on underneath the market. That's why I like to look at the volatility index. Let's look at some of these countries like Germany. I don't know why I keep doing that. I've got my zoom turned way up so I can just go straight to it instead of zooming and then. But anyway, you can see here we've got some sort of move up, which could be corrective, and then we got maybe a B down, and then now we're rolling over in C. So we're going to have a 1, 2, 3, 4, 5, something like that. Maybe a flat. Who knows? But this does not look that bullish to me. I mean, well, let's put it this way. It could be that this is 1 and this is 2, but this 2 looks pretty short and not complete. So maybe this is a flat where it's A, B went a little higher, and C, somewhere right in here, C will complete, and then we'll rally up in 3. That could be the bullish stance. I don't know. To me, if you want to be bullish here, you're bullish until it tells you not to be bullish. But I think, any pullback to a higher low, namely this low, and certainly this low, like let's say it pulled back but didn't give you a signal until like right in here. Okay, well, that's fine. Take that signal, right? Because now you got a low, a high, higher low, a higher high, and a higher low again. So especially if you don't really count this low. So to me, that's a great place to enter if in fact you're bullish. If you're bearish, probably should already be in this and trading down to this pivot right here. All right. Let's look at Japan. Japan looks a little bit more bullish, but I think the analysis is the same. The difference is Japan really never broke out of this channel, so it's kind of bounded here by this channel. Um, I don't like this so much for a bullish trade, although it could be bullish. I think there's better bullish trades than that one. Let's look at the UK. Same thing. It's kind of still in this channel. In fact, it went out of the channel to the downside here, and what we could be seeing here is where this right here is the first move off the low down here. We got a rally, and we're going to have some sort of, A, B, C. But I would wait for, a pivot off of this low here. I'd look to buy somewhere in here, for the upside. I wouldn't try to catch the falling knife, so to speak, just yet. I think it's a little too early to be in this trade if you're bullish. Let's see if there's anything else I want to look at here. And let's just go over to the toss charts. Finally got my link back, so we won't have to be annoyed by me typing in the stuff. But so, well, I'm going to have to zoom in on this one. Let me zoom in like right here. Okay, so first let's back up and review. So the euro ran up to an all-time high here. It's been pulling back for like 2.5 years. Made a low here, rallied it pretty hard up, and has been pulling back ever since. And we're basically all around the 61.8 retracement area, which is this line right here. We've just been all over that thing, and we got a pretty good rally off of here, and then just kind of a choppy looking pullback, which looks real. But I want to show you something on a shorter time frame. So let's look at a 4-hour chart. Maybe that's not. Let's try 1 hour. Okay. So I want to focus in on the right edge here, where we have to trade from. That's an important point, by the way. Everybody's always looking at this in hindsight and being able to see, in hindsight. And I just think that's kind of a cop-out. But here at the right edge, one of the things you'll see is kind of an up, down, and then back up, right? Which we refer to as an A, B, C. So we don't have to know whether this is a 2 or a 3 or a 1 or whatever. We don't have to know that. But what we do know is that this can't be bullish yet, because this pullback, see, let's say you thought this was 1 and then 2 here, and you would have entered in here somewhere. Well, that's fine. And you could have said, okay, well, that's a 3. And you probably would have taken some profit up here. But once it pulled back and got into this area right here, where this would be your 1, well, then you gotta say, okay, well, this cannot be a 3 here. So looks like I got all the profit I'm going to get out of this. I'm going to go ahead and put my stop in, take what little profits I made, and reevaluate. So what this is telling us is that if this is an ABC, then we've got to have some sort of impulsive move or 5-wave move down. And you can see here we got a 1, a 2, 3, I don't know, maybe a 4, 5, and this is another 4, and then we're going to have a 5. So, I mean, the odds are that this is coming into new lows. It's going to take out this low, which I have no idea what this is. But the point is, if you're long the euro, if you got long in here somewhere, either here or even here, hopefully if you got long here, you got out somewhere, in this area below these lows. But the point is, we got a 3-wave pattern, and that can't be impulsive. So it means we haven't started a new bull market to the upside. All right. So that's one of the cool things about just looking for ABC patterns, and don't worry about what the count is. Just look for an ABC pattern, and that'll give you an idea of where you need, or look for threes if you want to think of it that way. Just up, down, up, or down, up, down, and continuously trade those in the opposite direction. All right. Let's look at oil. All right, here's oil. So we got this large move in oil. Let's go back out to a weekly. So we've got, down, up, down. So potentially ABC here, and potentially, we've got like a 1, maybe to here, and then an A, B, C flat. Maybe we've started 1, 2, and we're going to have 3, or maybe this is going to be a big sideways pattern, and this is going to be a huge 4 for this 3-wave down, this 1, 2, 3. So I'll be 4, and there'll be a 5 down below this, and then off to the races in a higher degree wave 3 going forward. So to me, almost any way you look at this, it shows oil being very bullish longer term. The question is where to enter, and I think the answer to that question is down here around 33 or so, and then you can get really bullish oil. For now, if you want to just sell verticals or sell credit spreads, that's probably not a bad strategy. But I wouldn't take a direction just yet unless your thesis is, for example, that we're going to go down to this. The next move is lower because this is an A, B, C down to here. So we've got a 1, 2. So maybe let's just look at that, for example, because that could be a good trade. If this is A and this is B and we're looking for C, this could be 1, 2, maybe up to here, and then 3 down to here, and then 4, and then 5. So, you can also trade directionally as long as you have an idea of where you think it's going to stop and where you think you need to get out if you're wrong. It's always the same strategy, okay? All right, let's look at gold. Gold is kind of taken out here. We talked about it earlier. We're a little bit off on our little sketch that we drew, which means gold's probably going to go a little higher than what we've got here. So in other words, this area right here on the chart is my area right here that I drew. So obviously it's a little higher. So since it's a little higher, you still got this left, this up, down, up. So we could see a little pullback in gold, and then up around this 1500, 1550 area before things quit going up. Now silver's been lagging a little bit, but silver could catch up very quickly. Traditionally, silver, the ratio between gold and silver is like 50 to 1. Right now it's like 90 something to 1. So gold is overpriced, or silver is underpriced relative to gold, and I think you can use that to your advantage if you invest in either gold or silver. But if you're going to invest in one or the other, I think silver is probably the better way to go. All right, looking at let's going back to the euro. Again, the euro, if you go to a 4-hour chart, the euro made an ABCXC. So ABC, which case it's got to be going lower. It looks like it's maybe something just below this low, maybe not significantly below that low, but lower than this low nevertheless. So we had talked about, a couple weeks ago about being in the euro. I think, you know, depending on where you got in, I think it's still okay to be in the euro. If you're not in yet, you might wait and see if this pulls back to a new low below this low. All right, one thing I want to show you in the Elliott Wave short-term report. This is the put-call ratio. It's inverted, but you can see that every time we get up around this 90 area, 93, 94, we start to pull back. This one pulled back kind of late, but then we pulled back, right? Here, we've started to pull back. Now we've broken through the little shelf. So look for the S&P 500, excuse me, to continue to pull back. You can also look at the daily sentiment index, same thing. This one's against the NASDAQ. But you can see here with the low, matches a low in sentiment, 4% bulls. And then here this 95% bulls was with this wave 3, 91% bulls is this wave 5 and A, and then 9% bulls is this wave B, and then all the way back to 93% in a 5-wave move for the NASDAQ. Excuse me, for the NASDAQ. Sorry, I got a little yawn there. Been watching the British Open, and man, what a great golf tournament to watch, but I like to watch it kind of with one eye that opens and closes. And so needless to say, I get a little nap time in when the British Open plays. All right. Let's see, let's go back here to the 30-year Treasury. It's dollar. Yeah, so 30-year Treasury, we talked about the 10-year Treasury making another new high. Same thing with the 30-year Treasury. It looks like it made a 3, a 4, a 5, and then down in 4. This was what I was talking about. It was only a 3-wave move, and so we're expecting the bond market to rally, the 30-year Treasury to rally up into this 158 area, and the yields could go to 1.7 or so, 1.75. All right. I think that is it. I wanted to see if there was anything really long-term showing up on the... No. This is the ES weekly. And you can see, same kind of thing drawn here, this little megaphone thing. We got up here, tried to rally through this line, and, just took over and went red. And so this is one of the reasons why, when you start getting close to the top of one of these channels or one of these patterns, it's better just to get to the sidelines and sit on your hands. Yeah, I mean, if you're in there, you can grab another 2% or something, but the problem is once these roll over, they tend to roll over fast, like this. If you see this candle right here, see how fast this goes down? And this plus your indecision, this right here, look how fast that went down a little bit. So when you got in here and started chopping sideways, you could have put a stop in a little bit above this and then just watch all the craziness. To me, that's a better way to go than trying to get every little inch out of a market. It's just too hard. So, all right, everybody, that is it for this week. There's nothing really too pressing that needs to be discussed at this time. I really appreciate you coming in. Hopefully you're sharing the show with other people. We're getting to a juncture where I think a lot of the market's going to be confused. They're going to be calling for the Fed to do something, and it's just this move down, this 25% down here, is going to be pretty brutal, and it's going to really deflate a bunch of bulls. So get ready for that, and then about the time the last bear jumps out of the market, the last bull jumps out of the market, that's when the market will flip and turn, start going up and making new highs again. So let's see if we can be ready for that, help prepare one another for that eventuality, and just hope that we're smart enough and brave enough to take advantage of it when it comes along. All right. Thanks everybody for coming in. It's good talking to you, and we'll talk next week. Thanks a lot. We'll see you. Bye-bye.